Hey guys, what's going on? Coming at you with a New Year's video. Gonna try again to make it very consistent here and kind of give you my broad overview of where I think the market's going basically in the short term and throughout the whole entire year. So last year, the S&P finished at 15 and some change percent, I believe, for the annual return of 2025. I can say my portfolio did return. It did outperform. It went 32%. I'm a long-term investor, so really seriously crushed the market again. So I think my 3-year return, I think it's 148%. So I've on average returned damn near 42% annualized every year for the past 3 years. So doing a really good job, in my opinion, of managing the account. It's well balanced. Pretty optimistic in 2026 with all the big beautiful bill passing and some other things going on this year. So just to get into it, I feel like there's a lot of volatility. There's going to be a lot of land negotiations and a lot of abrupt, sudden things that are going to happen. That kind of just happens in the Trump administration. If you invested through his first term, this isn't new. This is something that's going to continue to happen. A lot of things he says, he doesn't get congressional approval, or he can't do, or says it and doesn't follow through with it. So you can't be overreactive in situations when investing with him as your president, in my opinion. So with that said, I'm currently sitting around 22 to 25% cash. I've been very conservative the back half of the year just because of tariffs. I do think it is a presidential overreach. I do think the Supreme Court will deem them that probably sometime in March, April, or May. So when that happens, there's going to be a lot of bullishness in the market. Obviously, costs can come down. I do think they will not return back pre-tariff. I think they're going to, a lot of companies are going to hold on to that margin, give a little back, boost up EPS. So if you're an investor, it's actually bullish, like very bullish if they get deemed illegal. So that's my base case. If it isn't deemed illegal, that's totally fine. Also, not too concerned about it. It is what it is. You just kind of deal with it. I feel like most companies have price adjusted. Wholesalers and retailers, they've blew through old inventory, so they're currently rolling at current costs, tariff adjusted. Atlanta Fed GDP is over 5%, so the consumer is still very strong. Unemployment's still under 4.5%. So, as long as people have jobs, I've been saying this, I haven't made a video in a while, but I still stand by this. As long as the consumer has jobs, they're going to find a way to spend, or they are going to spend, and they will find a way to afford it. They can use debit, they can use credit, they can use HELOCs, they can use firm or multiple paying for whatever solutions, or they'll take credit cards, open new lines of credit, and then rotate it in, that way. So no matter how you look at it, I'm pretty just, as far as like bullish to bearish, I'm definitely more on the bullish side this year. Unless something like a black swan event happens, which can happen obviously any year, then obviously the fundamentals change in that statement. But I don't see anything right now where, that really worries me. My 3 favorite plays right now, I've held all these positions for years and years and years. I love AMD. Yeah, it has had a run, but I think Wall Street's still misinterpreting it and kind of baking it into the whole, oh, well, NVIDIA's better, and, there's basically no room for AMD, or they won't have the crazy growth rates or whatever. I think that's a big mistake. The MI350 was a huge hit. MI450 is going to be better than Blackwell or the same, and it's half the cost. So as companies want to save and, help with the bottom line, they're going to, if AMD chips are the exact same or better, well, if they're half the price, a company logically is going to do that, especially mid-sized businesses, or maybe like not the Microsofts and the Metas and the Googles, where they basically have unlimited cash, so they don't even know what to do with all the free cash flow they make. So they're exceptions. So if Wall Street says, "Oh, well, Google's doing this, or Meta's do that," yeah, but they're like very rare exceptions to like businesses. They can buy whatever they want whenever they want. So I think AMD is a really, really good play come this year. I'm up, I think, 70-60% off my cost base, but I still really like it. If it has a significant pullback, I will be buying more, probably in like the 140, 150 range. I love Meta. I think that's another really misunderstood one. Just constantly innovating, constantly doing things. They just increase their spend on the Meta glasses because they're selling so well. So they're very disruptive for futuristic things. Meta under 600, really like. So I will be adding that. My cost base, I believe, is around 125. So I'm not scared to average cost up significantly because I think it's such a good deal this year, all things considered. And then my last favorite one's probably PayPal. Alex Chriss has been doing a great job. He's constantly doing exactly what he said he's going to do. I've held this stock since 2020. I haven't sold a single share. I've been dollar cost averaging down recently. So that's another one of my favorite ones right now. I think they're going to really outperform, especially if, you know, some of these, I don't know what it's called. I think it's called like the Mega Bill or the Mega Bill 2.0. If that thing passes, it's extremely bullish for payment for payment card companies. And then PayPal's looking to become more of like a bank and a multi-source solution in the banking sector on top of just credit cards and lending and paying for and all that stuff. So really bullish on PayPal long term. I think Alex Chriss is doing a great job. He came from Intuit, so really like him also. So I like that play. Those are probably my three favorite plays. Then right behind that's probably Amazon. So anything under $200 at Amazon, I don't know if it will get there, but like even like 210, 215, great buy if you're a long-term investor. So that's probably my fourth favorite. I will be adding that. AMD, Meta, and Amazon, they're basically already fully built in my portfolio. I can do a video, a breakdown of how I like balancing my portfolio if anyone's interested. So if you're interested in that, I can, you know, make sure you subscribe, like, and then comment below if you want me to basically go over how I balance my portfolio and hedge it and all that stuff. So I'd be happy to share that. Been investing for 8 years now. So I've considered, you know, I've been through recessions, shutdowns, stimulus, quantitative easing, quantitative tightening, Democrat administration, Republican administration. So I've been through a good bit, I feel like, for that amount of period of time. So been very consistent. I just, you know, consistently add, you know, make more or just consistently add to my portfolio. So yeah. So yeah, stay tuned. I'll let you know if I buy anything. The market is a little hairy right now, so I did not get through bank earnings, but I will go through that and let you know my thoughts on that. So yeah, make sure you subscribe if you like this video. All right, see you.